I'm going to show you guys in this video a very easy trading hack to use with NAS100 and US30. This is something that I've been using for months now and even years that has given me a very big advantage. It's helped me get really nice entries and give me exact confirmations on whether it's going to be a good buy or a good sell. So in this video, I'm going to break that down. Before we get started, if you guys want to be mentored by me, I do offer one-on-one mentorship where I teach my exact NAS100 strategy. All you guys have to do is send me a message on Instagram if you guys want to apply. And also, I now host live trading sessions where I get on a Zoom call with my students and I show them exactly why I'm taking a trade and we all take the same trade together. If you guys want to be a part of those sessions, sign up below. There should be a link in the description. And one more thing, if you guys could show some type of love, like this video, drop a comment below or subscribe to my channel if you haven't already. And now without further ado, let's get into this information because it is vital information that you guys all need. All right guys, welcome to my computer. The first thing that you guys want to do if you haven't already is get NAS100 Owanda on your watch list. This is the NAS100 pair that we are working with when we're looking at TradingView. Obviously, we're not going to be executing on TradingView. We're going to use our MetaTrader 4 with a broker or prop firm to actually take the trade. But I do all my analysis on TradingView. So the first thing that you guys need to do is we're not going to use the moving average. I find that the EMA is a little bit smoother. So type in EMA on the indicators, click this one right here. And then once you do that, you want to go to the settings. You want to make the inputs 20. With the style, I have it in yellow. I have the opacity all the way up and the thickness on number 2, just so it's a little bit more visible for me to see. So when I'm looking at my chart, we can see this yellow line is our 20 EMA, and I'm realistically using the EMA to overall give me a trend bias. If the candles are below the EMA, that's signaling that we're in a downtrend. I also do have my 66 EMA, which works amazing with the 20 EMA. So if you guys want to actually get that one as well, you guys can, but the main focus of this video is the 20 EMA. So the way that I use this is I realistically as a trader, I'm looking at my Asia session, I'm looking at what's happening during the London session, and then I want to see what's happening at the beginning of the New York session before the market open. Those are like my 3 times because that's going to formulate my bias on where the momentum of the market is going. And we can tell that from the Asia session, it broke into a downtrend. And look at how smooth today was for a Wednesday. And it was really smooth because Tuesday was absolute trash. I did not trade these markets because they were trash and I knew it wasn't going to be a good day. So we could see that today was pretty clean. But what I want to show you guys is how to really get confirmation on whether it's going to be a good buy or a sell. Now what I'm looking at is this candle in particular. Let me highlight this for you guys. Okay, so we're going to get this candle right here. And I want you guys to notice, look at, this was the market open candle right here, this green one. Now you guys need to understand that when we're trading, we want to be executing a trade on a candle when that candle closes in confluence with the trend. If we're in a downtrend, it would not make sense to go into a candle that's bullish for a sell. So what I like to do is I'm very patient. If I did not see a setup, if I would have traded today, which I kind of wish I did, but I don't trade Wednesdays. If I would have traded today and I saw this candle close, I would have set a timer on my phone for 13 minutes. And what I would have done is taken a shower, did some push-ups, made some coffee, anything that will set me away from my computer for 13 minutes. And then what I'm going to do is once that timer goes off, it's probably going to have like a minute 30, 2 minutes left on the ticker. And then I'm going to actually start looking at and seeing how that candle is going to close. Now, major hack, write this down. When I'm actually taking a trade, I'm waiting for that candle to close, but I enter in on that trade when it has 3 seconds left. 3 to 5 seconds is like a good time period because this candle right here, guys, look it has 8 minutes and 20 seconds left, but it's looking bearish right now. But what if we took a sell right here and then all of a sudden it shot up and we just rushed into the trade? We have FOMO, fear of missing out, and now we're stuck in this trade that we thought was a sell and now it's pushing up. So that's why I wait till it has 3 to 5 seconds left for the candle to expire, because that's overall going to give me the confirmation that I need. So here we go. We have our candle. I want you guys to notice this is the false breakout occurring. I'm going to give you guys so much sauce in this video right now. Look at all the retail traders, beginner traders, they see this candle and they notice that this is a bullish candle. So what do the market makers do? They push the market up. That's what I want you guys to notice right here. Let me get this brush. Notice this wick right here. Price pushes up. It traps all the beginner retail traders that have FOMO and absolutely no patience. It makes them go into long positions. And then what does this candle do? It hits our 20 EMA with the wick. This is overall what you're looking for. When you see a candle wicking the 20 EMA like this, and I'll go over more examples. This is just a prime example for today's markets. If you see the candle wicking the 20 EMA like that, that is a very strong rejection. I don't want to see it hit the EMA with a bullish candle like this. Right here, nah, these aren't good candles. Right here is a pretty decent candle. I like to see the EMA like be right at the wick, or where the candle just wicks it and then closes bearish. So if we were to have taken shorts today, we are now in this smooth, nice downtrend forming lower lows and lower highs, correct? So now what I'm looking at is I see this candle. This is a hammerhead candle right here, a bearish hammerhead, which is giving me a ton of confirmation that this puppy is going to drop very nicely. And I want you guys to note something. When you see a candle rejecting the 20 EMA like this, usually you can expect a very, very nice move away from the 20 EMA. Like, you're going to see price really drop. And we can see on this next candle, notice how price after that, it drops 542 pips within 15 minutes, which is pretty good for NAS100, knowing that NAS100 doesn't have that much volume compared to US 30. So that's a really, really nice move right there. So this is the first example. Usually what I'm looking for is I want to see like a hammerhead, a spinning top, shooting star candle, any candle like that that's rejecting the 20 EMA, and that's going to give me a ton of confirmation. So now let's go to another setup that I find very prime, and I'll break it down and show it to you guys. Okay, this was last Thursday, and once again we can see the market open candle right here, but one thing that I want you guys to note is this candle's a little weird. It is bullish, but it has a wick to the top. When you guys are trading, I want you guys to take and acknowledge the emotions that you are feeling. One key emotion that I look for when I'm trading is my levels of confidence. If I have high levels of confidence, that's probably going to be a trade that I'm confident in, and I know that it's going to hit my TP. But if I have very low levels of confidence when I'm looking at the markets, chill. We can wait a couple of candles to see how they open and close and to give us more confirmation. So once again, we have this false breakout. Let me zoom in here for you guys. Market open candle. After this candle closes, boom. It's casino time, baby. We're in the markets. The market is moving. So if I wouldn't have seen a setup at this candle, cool. I'm going to set a timer for 13 minutes. Once again, I'm going to walk away and do my thing, and then I'm going to come back. Note how the market, it did push up, or actually this market after this candle closed, it pushed down. And what did it do? It trapped all the beginner retail traders, the little impatient ones that think of trading as gambling. What does it do? It makes them jump into these sell positions. So if you guys look at this wick, it's not that big of a wick, but there's people selling right here. They're selling right here. They're selling all the way down here. Why? Because they are emotional and very erratic. And that's why I wait for the candle to close, because once I started doing this, my trading went to new levels. I conquered myself as an individual. I learned how to become patient and control my emotions. So instead of us jumping into this trade right here going short, we're like, nah, we're not even watching our computer at this point in time. What we're doing is we walked away, we took a shower, we ate breakfast, whatever it may be, walked our dog, and we're chill. Once that timer goes off for 13 minutes, then we come back and we're like, oh crap, imagine if we went into a short position right here and now we got stopped out because price shot up here. Notice how price, it came down and wicked that 20 EMA perfectly. Absolutely perfectly. And what candle is this right here that we're looking at? Hammerhead candle. this is when you are getting really strong confirmation. Okay, price is rejecting this point right here. It's now going to go up. One thing, major hack. If you guys see the candle rejecting the 20 EMA and we have our 66 EMA right here, but I want you guys to note something. Look how the 66 EMA right here crosses under the 20 EMA. If you see the candle reject the 20 EMA and the 66, it closes as a hammerhead candle or whatever candle that we need, and we see the EMA, the 66 crossing under the 20, wow, that is an A+ trade, baby. I am risking 3% of my account on that trade right there. So I want you guys to do one of two things. First thing, you guys should just go back and look at the markets with the 20 EMA, and if you want the 66 EMA, mark it up and kind of get a feel of what we're looking for here. Secondly, once you have done that and you kind of have some idea of what it looks like when it rejects it, go and back test. And when you're back testing, just stay on the minute 15, obviously. Okay, don't go on the minute 5 or the minute 1. Even though it does work on those time frames, I've noticed the 20 EMA works incredibly well with the minute 15 time frame. Go back and back test and see if you could see any of these trades setting up where it's just boom, hitting the 20 EMA, rejecting it to where you can get a nice trade. Hope you guys enjoyed this video and you got value. And guys, I appreciate every single one of you for believing in me, but watching my content. And we've had so many of you joining my live trading sessions over this past week. It's phenomenal. I look forward to helping you guys out. And if you want to trade live with me, once again, click the link in my description. I would love nothing more than to have a couple more of you on my live trading session so you can learn from me and you could just see what it's like to trade live with me and really understand my strategy in real time. Peace out, guys. I will see you later.